Hey everybody, welcome to the channel. Soil here, and today I want to show you the top 10 candlestick patterns which are the ones with the highest degree of accuracy. The information provided in this video is from the book Encyclopedia of Candlestick Charts by Thomas Bulkowski, who made performance rankings for candlestick patterns based on their accuracy rate. Without wasting any more time, let's get started. Alright, let's begin with number 10, Upside Tasuki Gap. It's a continuation pattern forming in an uptrend or advancing of the price, and it shows possibility of continuation for the upside move. The first candle is a medium to long green candle showing upside pressure, and after that a short to medium green candle forms with an upside gap, which can further show that the bulls are strong. And the third candle is a red candle that opens in the body of the previous candle but not able to fill the gap, and the candle closes above the first candle body. And this shows that the bears are not strong enough to break the support level that is created by the gap. This pattern indicates that the price is more likely to continue in the direction of the prior trend. This pattern doesn't form frequently, and according to Bulkowski, this pattern has 57% accuracy rate. Number 9, Matching Low. It's a bullish reversal pattern, meaning it forms in the bottom following a downtrend or near a support level, and it shows the possibility of reversal. This pattern is made of two candles. The first candle is a medium to long red candle showing downside pressure, as we expect for being in a downtrend, and the second candle is also a red candle shorter than the first candle that is opened in the body of the first candle. In other words, the second candle opens with a gap above the first candle close, which at first shows a sudden high buying pressure, but sellers step in and take the control of the price and again push the price down, and the candle closes at the price level that the first candle was closed. If the second candle has a lower shadow, the shadow should not go lower than the first candle lower shadow. This pattern shows that the bears are not strong enough to go lower, and a support level is establishing here, and this gives the possibility that this downtrend is weakening and we may have a reversal. This pattern also doesn't happen frequently, but it forms more than Tasuki pattern we just discussed, and according to Bulkowski, this pattern has 61% accuracy rate. Number 8, Bearish Breakaway. It's a bearish reversal pattern, meaning it forms in the top following an uptrend or near a resistance level, and it gives the possibility that the price is going to reverse down. In this pattern, we have 4 candles. The first one is a medium to long candle showing buying pressure, as we expect following an uptrend, and then the next candle opens with a gap above the first candle high, and the result is a short green candle with short shadows. The next 2 candles are also short candles, approximately in similar size with the second one, and the next candle opens with a gap inside the body of the previous short candle, and it closes below the second candle body or below its low in the ideal situation. If the gap is also totally filled, this gives even more probability of the reversal. The 3 short candles show overbought condition in the market, and with the last red candle engulfing the previous 3 candles, it indicates that the upside move is stopped and there is a possibility for reversal. This pattern rarely happens, but when it forms on the chart, according to Bulkowski, it has 63% accuracy rate. Number 7, Bearish 3-line strike, which is a bearish reversal pattern forming in the top following an uptrend or near a resistance level, and it shows the possibility of reversal. Following the advancing of the price, we have 3 consecutive short to medium green candles that the second and third ones are opened in the body of the previous candle, and this shows some signs of increased selling pressure. And suddenly a medium to long red candle forms on the chart that totally engulfs the previous candles. It opens above the third candle and closes below the first candle, and this shows a very high selling pressure and possibility of reversal. This pattern rarely forms on the chart, and when it forms, according to Bulkowski, it has 65% accuracy rate. Number 6, Inverted Hammer. This is a single candle pattern, and depending on its position on the chart can have different interpretation. We have a very short body, long upper shadow, and short lower shadow, or ideally no lower shadow. This pattern is naturally bearish because the long upper shadow shows that in that time period, the bulls finally lost the control and the bears could push the price down somewhere near the opening price. When this candle forms in the top, it's called shooting star, and it's a bearish bearish reversal pattern, and when this candle forms in the bottom near a support level or it forms following a declining of the price, it's called inverted hammer. When we have inverted hammer near a support level, it becomes a bullish reversal pattern because of the long upper shadow, which shows some signs of increased buying pressure, which is happening near a support level. And another situation of having an inverted hammer is following a downtrend. There is no support level. We have a medium to long red candle showing selling pressure as we expect, and then inverted hammer forms, which is naturally bearish, and this shows possibility of more declining of the price. Frequency of having this pattern on chart is moderate, and according to Bulkowski, this bearish continuation of the price after this inverted hammer has 65% accuracy rate. Number 5, two black gapping. This is a bearish continuation pattern and it forms in the middle of a downtrend. The first candle opens with a downside gap, which means there is a gap with previous candle and the shadows don't overlap. It's a medium to long red candle with small shadows, and being opened lower than the previous candle, it shows very high selling pressure. And the next candle opens with a gap somewhere near the midpoint of the first candle, and at first it may seem that buyers took the control and we have a sudden buying pressure, but instantly sellers take the control, don't allow the price to go much higher than the open, and the resulting red candle closes below the first candle close, or ideally below the first candle low. This pattern shows there is a possibility for continuation of the downtrend, and it happens frequently in the market. According to Bulkowski, this pattern has 68% accuracy rate. Number 4, bullish abandoned baby. This is a bullish reversal pattern that forms somewhere in the bottom following a downtrend or near a support level. The first candle is a medium to long red candle that shows selling pressure, and after that the next candle opens with a considerable gap below the first candle low, that at first it seems that selling pressure accelerated and we are encountering a very high selling pressure, but buyers step in and the resulting candle is a doji, which shows complete indecision and a standoff between bulls and bears. Pay attention that this is a downside gap, which means there is no overlap between the shadows. The next candle, which is a green candle, opens with an upside gap, which means that its lower shadow doesn't touch the upper shadow of the doji. This pattern shows that the declining of the price is weakening and the bulls are in control now, and there is a possibility of reversal and advancing of the price. This pattern happens very rarely and making it not highly tradable pattern, and according to Bulkowski, this pattern has 70% accuracy rate. Number 3, evening star. This is a bearish reversal pattern that forms somewhere in the top following an uptrend or near a resistance level. The first candle is a medium to long green candle as we expect for being in an uptrend, and the second candle is a small candle that forms in a star position. Actually, it's a spanning top candle with small shadows. The color doesn't matter, and it opens with a gap, and there is a gap between the two bodies. And the third candle is a medium to long red candle that opens with a gap below the second candle body and goes down considerably in the body of the first candle. It's better to go below the midpoint of the first candle. This pattern shows that the bulls are weakening and there is a possibility that the advance is ending and we may have a reversal and declining of the price. The frequency of forming for this pattern is moderate to rare, not happens frequently, and according to Bulkowski, this pattern has 72% accuracy rate. Number 2, 3 black crows. This is a bearish reversal pattern and it forms somewhere in the top following an uptrend or near resistance levels. The first candle is a medium to long red candle which shows selling pressure somewhere in the top. The next candle opens with a gap above the first candle close, but no chance for the bulls, and the bears push the price lower significantly and the candle closes below the first candle close. The third candle again opens with a gap above the second candle close, but this time also the bulls are not able to take the control and the bears push the price down and the candle closes below the second candle close. This pattern shows that the advance is weakening and the bulls are not able to drive the price higher, and the selling pressure is much higher than the buying pressure, and this indicates that this uptrend may end and a reversal is possibly happening. Frequency of having this pattern on chart is moderate, and according to Bulkowski, this pattern has 78% accuracy rate. And number one, the highest degree of accuracy for bullish three-line strike. This is a bullish reversal pattern and it forms somewhere in the bottom following a downtrend or near a support level. In this pattern, we have three consecutive short red candles and second and third ones are opened in the body of the previous candle, and this shows signs of increased buying pressure. And after that, a long green candle forms that totally engulfs the previous candles, which means the fourth candle opens with a gap below the third candle, but suddenly because of high buying pressure, a long green candle forms and it closes above the first candle. This pattern shows a very high buying pressure and possibility of reversal and advancing of the price. This pattern rarely forms on the chart, but when it happens, you'll have the opportunity of having a pattern with the highest degree of accuracy. According to Bulkowski, this pattern has 84% accuracy rate. Please pay attention that the success of every single trade depends on the situation of the market in the time of trading, which is based on many factors. So pay attention that these statistically significant levels of accuracy are from past performance, and now based on the current situation of the market, they may be higher or lower. And also pay attention that you must never trade only based on candlestick patterns, and their confluence with other levels must be considered, and they must be used in conjunction with other tools and concepts of technical analysis. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.